And let me start by saying that my colleagues and I strongly support the goals that Congress has set for monetary policy, maximum employment, and price stability. We also support clear and open communication about the policies we undertake to achieve these goals. We owe you and the public in general clear explanations of what we're doing and why we're doing it. Monetary policy affects everyone and should be a mystery to no one. For the past 3 years, we've been gradually returning interest rates and the Fed's securities holdings to more normal levels as the economy has strengthened. We believe that this is the best way we can help set conditions in which Americans who want a job can find one and in which inflation remains low and stable. So I will review the current economic situation and outlook, and then I'll turn to monetary policy. Since I last testified here in February, the job market has continued to strengthen and inflation has moved up. In the most recent data, inflation was a little above 2%, the level that the Federal Open Market Committee thinks will best achieve our price stability and employment objectives over the longer term. The latest figure was boosted by a significant increase in gasoline and other energy prices. An average of 215,000 net new jobs per month were created each month in the first half of this year. That number is somewhat higher than the monthly average of 2017. It's also a good deal higher than the average number of people who entered the workforce each month on net. The unemployment rate edged down 0.1% over the first half of the year to 4.0% in June, near the lowest level of the past 2 decades. In addition, the share of the population that either has a job or has looked for one in the past month, what we call the labor force participation rate, has not changed much since late 2013. And this development is another sign of labor market strength. Part of what has kept the participation rate stable is that more working-age people have started looking for a job, which has helped make up for the large number of baby boomers who are retiring and leaving the labor force. Another piece of good news is that the robust conditions in the labor market are being felt by many different groups. For example, the unemployment rates for African Americans and Hispanics have fallen sharply over the past few years and are now near their lowest levels since the Bureau of Labor Statistics began reporting these data in 1972. Groups with higher unemployment rates have tended to benefit the most as the job market has strengthened. But jobless rates for these groups are still higher than those for whites, and while 3/4 of whites responded in a recent Fed survey that they were doing at least okay financially, only 2/3 of African Americans and Hispanics responded that way.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.